What up, HyperChange? We got to make an emergency episode here. Palantir is at $103 a share, an all-time high. Congrats to all shareholders, especially my homie Amit. Absolutely crushing it. The stock is up 24% today on new Q4 earnings. The stock is up 36% for the year, 518% in the past 12 months. So this stock has been on absolute tear, going from like the 20s per share to now 100. The valuation has hit $258 billion. So I wanted to dive in on, and I'm not a Palantir shareholder. And I don't want to come off as a hater either. I think it's an amazing business, fascinating company, crushing it, awesome community online. But I wanted to ask the question, is this fairly valued? So I went ahead and took the liberty of setting up Palantir's financials so we could check out and kind of walk through how I think about the valuation of Palantir at this price. Because I think there's so much speculation about the stock and excitement around AI and Alex Karp and the CEO, but what does that actually translate to in terms of financials? Is this a rational valuation? Will they be able to live up to those expectations? I'm going to give you my flavor and thoughts here. So right now, Palantir, if we assume 102 per share, it's already at 103 in the time since I made these slides like 10 minutes ago. If we assume $102 per share, 2.53 billion shares, which is the fully diluted share count from the newest income statement that just dropped, we are looking at a $258 billion market cap, which is very big, but also not that big if you consider, Microsoft is worth a few trillion, Tesla's worth $1.5 trillion, so Palantir would still have to 10x or more to become the world's largest company. So still not in the $1 trillion club, not even really getting close, but 258 billion is no small feat. And we'll show you, and now let's dive into the hood though, of what Palantir's financials are before we even talk about the business. Palantir's, or actually before the financials, here's the high level valuations at 258 billion, just to give you a sense. And these are based on the trailing 2024 numbers, and I'm going to adjust them for the forward-looking numbers in a second. But first, what is the current valuation of Palantir? We are looking at 90 times price sales. That's based on 258 billion divided by 2.866 billion in revenue they just reported for the year. 112 times gross profit of 2.3 billion and 832 times earnings of 310 million, which did triple almost for the year. So earnings are growing rapidly, but that multiple 832 times, Jesus, that is insane. So now let's dive into the numbers, look at the trend, get a better sense for this. Palantir's revenue, very sticky, software, reoccurring, very high margin. That is why you're looking at a very high price sales business. But when we think about high price sales, we usually think about 10 times price sales, not 90 times price sales. This is like, I've seen 20 times price sales for SaaS, that's crazy. 30 times, that's crazy. But 90 times, and Palantir only grew 36% last year, which is above 29%, but they're only guiding for 31% growth. So 31% growth for 90 times price sales is insane. But look at the consistency of this revenue. If I'm going to play devil's advocate on both sides, we've got an acceleration of momentum here, 29% growth in 2023 from 2022, and then 36% growth from 2024 to 2023, 2.9 billion up from 2.225 billion. But it's just an asset that's worth 258 billion with only 3 billion or so of revenue and booming. I mean, it just takes so long. And it's not like revenue's tripling. It's not like revenue's quadrupling. It's this very slow, steady, slow like a turtle, kind of slow and steady, step by step, brick by brick, SaaS recurring revenue business. The gap, and this is what's very important to remember at Palantir, the gap income statement is lagging behind the company's progress because they recognize this revenue, at each quarter as they do the contracts, and they're layering more and more contracts, but these contracts are very longer term. Palantir has a lot of deferred revenue, and it takes time for sort of the success of their business to play out on their financials and income statements. So that's a very important thing to remember here. How much of this is me looking in the rear view mirror and not being able to see what's coming, and how much of the gap income statement are underplaying Palantir's valuation, and actually, how much cash generation they could have. That's all important things to consider. But here's the revenue chart. Gross profit, as you can see, almost as high as revenue. Basically, very high margin revenue here from that 2.866 billion in revenue. 2.3 billion of it was gross profit. So once again, gross profit growth accelerating here, a very profitable business that's justifying the high price sales. Now, if we go to the actual earnings for Palantir, we're looking at 310 million in GAAP income, up from 120 million. So basically, this is where the excitement is. You have this sort of acceleration in revenue growth here, and then you have earnings flipping positive to 310 million. So These are the numbers right now, and I think very strong year for Palantir, actually showing they can pump out a ton of cash. But now it's also interesting to note that the cash flow is better than the earnings because A, they're paying out money in stock to employees, so that's important to keep that as an expense, but it's not a cash expense. But the cash flow, also because they're getting paid for some of these contracts, but they're only allowed to recognize the revenue over time, the cash flow is much better than the earnings, so that's another thing to adjust. But if we take all of this summation of this and fast forward a year, I estimated the valuation based on 2025 financials. I assumed revenue would grow in line with their estimates at 31%. That compresses the price sales ratio to 69. If we assume that gross profit grows 40%, even faster than revenue, which is what I assumed, it's still 80 times 2025 gross profit. And if we assume GAAP operating income triples to 930 million, then the price earnings or price profit drops to 277 times. So 277 times forward earnings, even if we assume a triple, that seems extremely steep. So my first high level reaction here is, A, you have an amazing high quality business, so it's never going to be cheap. That's growing. That's very strongly positioned for AI. That's very strongly positioned with the new US administration. That all deserves a lot of bullishness. But 277 times earnings, you're going to have to grow earnings into the tens of billions to justify this valuation. So it's important. If you're buying Palantir today at this massive $258 billion price point, you are assuming they will be able to do tens of billion in earnings because you're assuming it's going to be worth 500 billion, right? That's why you're buying at 258 billion. So at 500 billion, they need to be generating tens of billions of earnings. Well, I think the problem is they're so far away from generating tens of billions of earnings. This revenue train isn't even going to hit 10 billion for years. So how are you going to get tens of billions of earnings for years? And it's just going to take years to play out. My take before I get into too much more of this is I can almost sum up everything that I'm going to say about Palantir in this whole video, which is they're basically pricing in a massive amount of the future. I think Palantir is an amazing business, but I think the market is already pricing in 5 or 7 very successful years. So if you're buying Palantir today, you need to have an alternative view. Are they going to be even more successful than people could even fathom? Or am I just willing to hold long term? I don't know. Now, here's the actual press release that Palantir put out. As you can see, 2024 revenue growth of 36% year over year. And they're doing a lot of highlighting to talk about the U.S. Commercial business. So basically, commercial revenue in the U.S. grew 64% year over year in Q4. So this is the accelerating part of their business that led to the accelerating growth this year. As you can see, 36% revenue growth, up from 29%. I think that kind of sums up why the market's getting so excited about this company. Actually, one thing I did want to throw out there for Palantir nerds who could help me with this, the share count, when I dived in to make this episode, is actually increasing about 10% a year, which is a lot of dilution. When you consider that earnings or revenue is only growing 31%, you also need to account for 10% annual shareholder dilution. So that's something that I would look into if I was a shareholder too. But this is where I got the 2.53 billion to calculate the valuation. But this is the income statement here. This, they said, would have been closer to like 140, 150 million of earnings, but they had to recognize some SAR, stock appreciation something, basically stock-based compensation expense that was more of a one-time thing that hit earnings this quarter. But here's an important thing to remember. I never basically take the adjusted numbers from the company. Like if you're going to look at Palantir here, when they talk about their guidance, they're going to give a lot of adjusted numbers. So that's, see, for their earnings guidance, it's adjusted income from operations. I wouldn't buy that because I would say, you're going to exclude some stock-based compensation, which we have to stomach as dilution. I like to be conservative. It's less about trusting management, more about just being like super conservative. So I use GAAP operating income. But this is also why it's important to really understand what you're buying. Because Palantir's cash flow, and screw the GAAP or non-GAAP adjusted thing, even if we use their GAAP cash flow, it's very, very strong. Because GAAP, hold on, I don't have to find this, because Palantir makes so much cash. So this is a very important piece of the business to understand. The income statement is underplaying the amount of cash that Palantir had, right? Here's the net income. But Net cash providing by operating activities was 1.1 billion, despite net income being 467 million for the full year. So even though I said Palantir made 310 million in earnings this year, based on GAAP operating income, cash flow, the cash provided by operating activities, was 1.1 billion. Now all of a sudden, if the trailing, I'm like, oh, it's 800 times earnings. Well, really, 258 billion divided by 1.1 billion is like 200 times trailing cash flow. So they're only 200 times trailing cash flow. And if you think cash flow is going to double again, well, actually, they only say it's going to grow like 30%, I believe, in line with revenue. But if you believe cash flow, and you kind of believe the numbers that Palantir tells you, and you're like, oh, this free cash flow of 1.5 to 1.7 billion next year, I want to value it on that. So then the valuation starts to make a little more sense, like 258 billion divided by 1.6. Then it's like, okay, well, it's only 150 PE, right? So let's do that math here. 161 times forward cash flow. So here's my point with Palantir. You have a business that's producing now 1.51 billion in cash flow, depending on how you do the accounting. Very strong cash flow each year, very strongly positioned in the government, using software, massively even though they're only growing 31%, let's say they can grow 35, 40% for a few years, which I think is generous. I think their earnings are going to grow faster than that. But the problem is there's so much earnings growth priced in. Yes, you're going to get earnings that could compound at 50% intrinsically for 5 to 7 years. But is that priced in? I would argue yes. So I think this is a fascinating case study with Palantir stock. I do want to reiterate how I think this is an amazing company, and everybody who invested in them totally found a hidden gem and crushed it. And this was an example of the internet finding stocks before Wall Street once again. I mentioned Amit and like Arnie, all these guys I follow on X. Shout out to them. They're super cool in this kind of Palantir investing community that I've seen develop. They've crushed it. They have nailed this. They discovered this amazing company. But now the question is, did it get overheated? Was the same company that was underpriced just a year ago or 2 years ago at $6 a share overpriced here at $103 per share? Or has Palantir's momentum, is their position as an AI company in the new Trump administration with this new type of America, with AI having unlimited potential, is this valuation justified? Well, okay, so that's just me being like kind of political and saying everything. If I was going to give you like my homie like analysis on what I actually think, like I think it's overvalued. Like I think Palantir, amazing company. They do deserve a very high premium on their valuation because of the long-term growth potential, the low churn, the incredible caliber of the CEO, Alex Karp, who owns about 3% of the business according to Google, which also not a red flag, but I would like to see those numbers up a little bit more because he's already a multi-bazillionaire. And I don't think he's like when you think of Elon Musk, like he wants to go to Mars. He's incentivized to make more money. Is Alex Karp? I don't know. But I will say Alex Karp is, I think, one of the most badass CEOs in the whole world and has absolutely crushed it and is an owner, operator, founder. And I just think he's like a creme de la creme CEO and a super badass who I respect. So if you're going to invest in a public company CEO, I think like Alex Karp, Elon Musk, like these are some of the GOATs. So I think he's a big reason why you're getting Palantir's valuation is because you're buying into this genius, next level CEO. So that's not going to be cheap. But 258 billion, I don't know. I just think we may have gotten ahead of ourselves. And I think you got to look at the numbers here. Palantir itself, unless they're sandbagging, is saying growth is going to decelerate down to 31% next year. So screw the adjusted US numbers, screw the hype on unlimited AI demand. If this is truly a software business, if it's truly easy to scale, if there's truly massive incremental margin, if AI demand is truly unlimited, then why is revenue growth slowing from 36 to 31%? There's no way I'd buy a business with this high valuation with growth slowing from 36 to 31%. If Palantir was accelerating growth from 36% last year to 46% to 56%, then you might have me. But the deceleration in growth is I don't know. I just think we're a little bit overvalued, but I've been thinking Palantir's overvalued since 50 a share. So I've been fascinated by this case study. I will continue to follow it. I love learning and just following these case studies. It's how you learn. But right now I'm on the sidelines. Think it's an amazing company, but I don't understand it that well. So I'm not going to invest in it. And to be honest, I think the upside at this valuation, I don't know. But let me know what you think in the comments below. You tell me why you're buying or holding Palantir at this price. I really want to know. And let's dive into the numbers because, I love, like, let's do the math. Like, where is the 10 billion in earnings coming from to justify your upside? Let me know, because I don't even think they're going to hit 10 billion in revenue for years. Anyway, peace.